Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis, and today we're going to be talking about the Graph GRT. So let's just dive in and let's talk about a few things. So I am sure that you are all aware of by now, like Web3. You probably heard about it, you probably know about it, you probably already have done your research on it. But nonetheless, we are actually going to be talking about Web3 today with the Graph, because I do think that the Graph going forward is actually going to be a very significant token, especially around the Web 3.0 area. Now, the Graph was actually one of my strongest plays from around like the 2020 to 2021 timeframe. We got in around almost like the 30-cent mark exact, and we held this for like legit, not even going to lie to you guys, about like over a month, and we seen us, hit like almost $3. I know that this is saying like $2 and like 30 some cents, but just to kind of prove it to you guys, if we come down here over on this slide, here is the all-time high of roughly $2.88. Now, since then, a lot of individuals have been saying like the token dilution is real with this token, etc. To me, I actually think that the token dilution is not that bad. I think that a total supply or max supply of like about 10 billion is not bad at all. And we have been seeing a few a little bit of a downside on the total addresses, but slowly accumulating still. We just recently hit like over 100,000 total addresses for the Graph, and yes, like the number one held wallet here, that 31.5%, we actually broke that down in a video before. It's more so for like token unlocks and stuff like that, which we've addressed multiple times. But yeah, I mean, like a $2.88 GRT, it had about a market cap of $21.3 billion. At that market cap, if we had like the total supply, still it's roughly about like $2.13. If we double this, by the way, like next bull run, so like we would be at like $42.6 billion in market cap. We'd be sitting at about roughly a $4.26 Graph from almost 10 cents, a 43x opportunity, which I think is pretty reasonable. Just to kind of refresh this and kind of show you guys what the market cap would be at with our total supply right now, like the current 7.4 billion that's out there. So we would be sitting at roughly, let me actually do the math real quick, 42.6 billion. We would be sitting at roughly an upside of 58x, $5.76 per GRT. Now, do I think that this is possible with a market cap of like 42.6 billion? Yeah, I do. And we're going to be talking about why. So first off, as we do see Web 3.0 basically building up in terms of like, not only momentum, but also hype, I do think that tokens like Graph GRT are going to play a pivotal role going forward. And no, this video is not sponsored or anything like that. I actually truly do support the Graph. Like I said, it was one of my early wins, and I do think that it's going to be another win going forward. But we do see GRT gets a double-digit boost in price after its catalog of subgraphs expands, and Web3 becomes a trending discussion topic among crypto and tech sector experts. Now, this goes back to February of this year. Since then, a lot has happened, including the price dropping even more. At the time that this was posted, I think that we were sitting at like 34 cents or 48 cents or so. But yeah, we have been seeing a large, impact on the subgraphs. Like back then, we did see here like a gaming subgraph has migrated to the Graph Network. Nifty League is a community-led game studio known for its Nifty Smashers NFT-infused fighting game. In-game NFT data is fetched utilizing Nifty League subgraph in a decentralized way. Now, again, like I said, like these were just a few updates back then. Like here's another one from the Graph Academy talking more so about like this new initiative, the Graph Academy certificates, stuff like that. But Web3, right? So I don't need to tell you guys about how large of a market, Web3 is. I think that they do have, or I thought that they had like a Web3 area on here. But we've been talking about like Web3 for a while. If I just go over here to search and type in Web3, for an example, you can probably see all of like the new updates here. Like here's, one, how Web3 could democratize, donations, how we arrived there and why we need its Web3 upgrade, the creator economy, time to accumulate, 5 sectors to watch for, and, crypto winner. Web3 definitely is one. And there's just so much more to this space that I don't think that a lot of people are paying attention to. We also see like a few things about how to improve Web3. Graph definitely does improve it quite a bit, and we're going to be talking about why right now. So we do see here the Graph cleans up complexity in its Web3 infrastructure. And we do see down here, Graph Day held last week in San Francisco by Edge and Node included a number of announcements aimed at benefiting the developers who use the Graph protocol, the indexing protocol used for querying Web3 networks. Here's the news from the event that will affect developers who are creating the open APIs called subgraphs and leveraging the Graph protocol for projects. Now, first off, here is them talking more so about like the hosted service versus decentralized network. We do see like the Graph network, and we do see like hosted service. And we do see up here they're talking more so about this. So in a later presentation, Brendan Ramirez, head of research and product at Edge and Node, flashed the following graph on the screen showing that both services are very close to operating in the 5 nines range we've come to expect for web services. There are even times, when the Edge and Node's hosted service, has had significant outages and the decentralized network has been more robust. This should create confidence for developers to know that decentralization is ready to fully support their workflows. This leads to us to the next announcement. And yes, I do think that like outages and stuff like that around like services has been a very large issue within crypto. I'm sure that you guys are probably aware of this with Solana and things like that. But we also do see like proposed expansion to layer 2 scaling. And this is where I think that the major upgrades are going to benefit Graph going forward. So first off, we do see down here a proposal for a community vote on supporting the Graph network transactions on the layer 2 Arbitrum blockchain. A key motivation for this proposal is reducing the transaction cost for indexer, curator, and delegator roles. We do see the upgrade subgraph estimated is based on 2 upgrades or updates to a subgraph per month, costing approximately $91.50 today and dropping to $3.50 for the same 2 updates on a layer 2 solution. And we do see down here the allocation life cycle's cost of running an indexer for a fixed period of time, which also results in substantial cost savings. So first off, here you have Ethereum, which they currently are running on, which is like $91.50 for upgrading a subgraph. Allocation lifecycle $105 a month, and we do see like allocation lifecycle times 4, $420 a month. And then we also do see like over here Arbitrum 1, and then we do see like Arbitrum 1 plus Nitro, and you do see like the significant cost savings here compared to like utilizing something like Ethereum, which we do know like Ethereum is very rough to utilize. And we do see in theory this should translate to either lower cost for the same frequency of subgraph updates or the opportunity for more frequent updates because the costs are lower. So I think that this is going to open the doors for a lot more developer use cases and things like that. And then we do see like improved developer experience, subscription billing as well. And we do see down here, all of these announcements are a good indication that the Graph is becoming a mature infrastructure solution. Moving to fully decentralized networks should create network resiliency. The proposal to support layer 2 transactions will definitely reduce cost and likely create opportunities for smaller dApps that couldn't justify Ethereum economics. And while issues around cost and billing are never sexy, they do make it easier to get the finance team on board when they are more predictable. Now also, like I said, with the subgraphs, we have been seeing a major expansion from the Graph themselves around this area. But first off, here you have APIs for a vibrant, decentralized future. The Graph is an indexing protocol for querying networks like Ethereum and IPFS. Anyone who can build and publish open APIs called subgraphs, making data easily accessible. And yes, this is onboarding use cases around like the Web3 scene. And of course, we do see here like a global Graph QR API. Subgraphs can be composed into a global graph of all the world's public information. This data can be transformed, organized, and shared across applications for anyone to query with just a few keystrokes. Say goodbye to custom servers. Before the Graph, teams had to develop and operate proprietary indexing servers. This required significant engineering and hardware resources and broke the important security properties required for decentralization. So when we talk about this, I do think that Graph is going to not only be huge and play a huge role within the Web3 economy, but also they're really kind of driving adoption of Web3 as well. Web3 is a new stack for a radically better internet. All data is stored and processed on open networks with verifiable integrity. The Graph makes querying this data fast, reliable, and secure. Like I said, it's streamlining the entire process. And we do see so much is getting built: DeFi, governance, grants, and philanthropy, marketplaces, entertainment, and of course, social. And we do see down here on a shared neutral foundation. So agency, own your identity, data, and reputation, money, programmable money, and financial contracts, reliability guaranteed to run forever on a reliable public infrastructure, security, safe, secure, and private, interoperability, seamlessly switch between dApps, governance, transparent rules that people have a voice in. By combining Web3 protocols, developers can build dApps with powerful new features for solving the world's greatest challenges. And of course, they have supported massive networks. I remember when Ethereum was their only one, and now we do see like even more down here. Like we do see a quite a bit of other major networks. Like for an example, you do see Polygon, Near, BNB, Avalanche, Cello, Arbitrum, Phantom. I mean, like these are some major names, and of course we do see like Harmony One. I look forward to seeing Hedera there some point in time. Then we do see down here live on the mainnet the Graph network. So currently, right now, we do see like developer create a subgraph or use existing subgraphs in a DApp, index or operate a node to index data and serve queries, curator organize data by signaling on subgraphs, and then delegate or secure the network by delegating graph to indexers or GRT. And then we do see like the products down here as well. And yeah, so when we really kind of look at this, there's a ton of live products as well. Many of the best projects are utilizing the graph in production today. We do see Uniswap, Synthetics, which by the way, I just talked to you guys about Synthetics. Huge platform, huge project as well. Decentraland as well, and then Aragon. And these are just a few of many. If we go back to like even first off, real quick, their backing is fairly large as well. You guys are more than welcome to take a look at this real quick, but let's go check out their subgraphs. So here we have a lot of subgraphs. We have over 400. Now these are projects at the end of the day. Like these are very large projects. A few of these you are probably all aware of, like Sushi for an example, ENS Protocol. Again, these are very, very large projects that a lot of you are probably all aware of. We do see Balancer, SNX, Doodles Bucket, which is like an NFT project, which I'm sure that you guys are aware of as well. We also do see like Loopring, Snapshot, Looks Rare, Artblocks Curve, Decentraland. Like this is why I say like this is a major asset like going forward. Like the Web3 economy, like this is truly going to disrupt the Web3 economy. I'm very excited for Graph. Going forward, like this is probably going to be one of my main choices. I think that, at the core of everything, with this infrastructure continuing to grow, I think everybody's eyes should be on it. And as funny as it is, like Masari just actually posted this update saying eyes on infrastructure. Subgraphs migrate away from the hosted services. Graph Protocol saw a 1,050% increase in revenue quarter over quarter, from query fees. And we do see the graph revenue increase by 1,050%. Demand side revenue generated from end users paying a fee to query index data. And of course, like you see like the demand side revenue, and it's something special here. I mean, like you could definitely see it expanding and growing. We do see down here for a full look at how Web3 infrastructure protocols fared in generating revenue during quarter two. Take a look at old Samster's report. And to me, I think that a lot of people will continue to look at the graph and kind of just overlook it just because of price action alone. But to me personally, like this is the best time to really kind of look at the graph on the 1 week. So let's actually go take a quick look at the 1 week in terms of price chart. So to me, when we really kind of look at the future of this, like I'm just eyeing like the all-time high from this range that we have currently, which would be about a 34, almost a 35x opportunity. But could I see this thing running to like almost $8, which would make it over a 90x opportunity? Yes, I do believe that it could. I mean, like if we actually go and look at like the $8 range on this, first off, even with all of the token, dilution in there, we would still be sitting at about an $80 billion market cap. Would be sitting at about a $59.2 billion market cap at $8 if we do, utilize the supply that's out there right now, which would be an 81x opportunity they're saying here. Like I said on the chart, it's a little bit different because we are going off of the bottoming range down here. But this is definitely something special. Like when we look at how large Web3 will become, they are saying like it could possibly balloon to like $144 trillion plus market. I do think that graph is going to play a pivotal role. So with that being said, I hope that you guys enjoyed this. If you guys did, definitely leave a like, subscribe, to notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or beautiful night, wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.